You say the biggest concern that everybody's grappling with right now is just trying to figure out if we are headed into a recession, and if so, how soon?
Right, and I think after December, people said, okay, that was a little bit scary. So now the question is, do you own what you really want to own for where we are in the cycle and for what your goals are for the next few years? We don't think we're going to have a recession in 2019, but if you were rattled by what happened, we've now rallied, almost 10% from those lows. It's time to take a look at what you own and maybe make some shifts if you don't think you can stand that volatility from here. I do think it's still going to be a trader's market. We're going to see volatility. There's a lot of question marks regarding geopolitical risks and policy going forward.
What would you be telling people to get out of, first of all, and maybe then what to get into if you can't handle that volatility?
Yeah, I mean, I think when you think about how low rates were for so long, right, people were pushed into certain assets because they were craving yield. So high yield now has rallied year to date. If you own bonds that you don't really want to own long term and you're worried about, credit and what's going to happen to spreads, especially if rates keep rising and if it gets more expensive to service that debt, maybe you should be rotating into something a little bit safer.
Although what we just heard from Powell doesn't make it seem like rates are going to push a lot higher really quickly.
Yeah, and that's why we still remain very constructive on equities, right? In this environment where rates are in this range, you want to own equities. Valuations have come down quite a bit, and we actually are about to enter earnings season. I think that's going to validate my view that you're still going to see earnings growth in 2019. We're not going into an earnings recession.
I mean, that's an interesting point, too. And Jason, where do you come down on this? Just, first of all, let's just look at earnings as a potential recession or not. If we come out with earnings that are up 4, 5, 6%, that's probably a win based on what market's expecting right now.
I think, the most non-consensus view I have is that I not only don't think we're going to have a recession in 2019, I think there's a decent chance you don't have a recession until 2021 or 2022.
So two more potential years.
There are times where you have earnings recessions and you don't have an economic recession. 2014, 2015 was a period. You never have a period where earnings are up and the economy goes into recession. That's never happened. And I'm still, I'm keeping the faith. I think that the tax cut that was passed at the end of 2017 I don't think it's a sugar high. I think it's something that is a supply side tax cut that should provide the basis for greater investment, greater productivity, and modest inflation for a long time to come. So I'm quite optimistic, and I would be going into the industrial sectors. Didn't work last year. I mean, and this gives you I'm sort of keep going off on this, but if you were given all the fact patterns of what happened last year, 20% earnings growth, 3 to 4% GDP growth, and you said, well, the best performing sector is going to be utilities and healthcare.
I mean, but that's looking at it in a vacuum, not considering the gains that we got.
That's fair.
Heading into that the year before.
That's fair. And I think there were real concerns about the sustainability of the recovery going into 2019. But I think, especially now with Powell, unlikely to make a policy error. With the Fed unlikely to make a policy error, in my opinion, it's safer to go into the cyclical sectors.
I mean, if I'm reading into it a little bit, it sounds like you think there could potentially be a lot of bargains out there,
right.
too.
Oh, listen, I think the least safe place to me right now is the safety trade, which are utilities, consumer staples, maybe to a lesser extent healthcare. Because if you look at the valuations of those sectors, they're bid up to the point where people are really battening down the hatches.
You're looking at a whole group of investors who are now sitting on cash, thinking that this is supposed to be the year of the recession, right?
Yeah.
Or that a recession is coming, and that they're waiting for this moment. And always the question is there a moment, or is the moment never? Is the moment already passed? Did the moment happen the week of Christmas?
Certainly a moment happened the week of Christmas for some sectors, right? You look at tech, and you saw some of those names in the biggest days of weakness starting to stabilize, right? With some of the social media names and Facebook. Obviously, Apple's been under pressure, but there are values still in some of these sectors, and people are starting to look at them again. And again, think about, this is something I want to hold for years to come, and I can get comfortable with some of these stocks at this valuation, knowing they're buying back stock and there's some support from the company.
I mean, Cramer was saying last night that there's still time to buy many of the FANG stocks. I think he left Netflix out of the group. But
it's had a big rally in the
Facebook,
past couple
Apple,
weeks.
Amazon, all of them going down the line, Google.
I just think what we've learned is in the right size, right? These were very crowded trades. And so, again, you got to take this opportunity to look at your portfolio and say, am I too levered to this space? You want to have some exposure, but certainly shouldn't be massively overweight.